If you're hoping to buy or build your first home and you're worried about pulling together the money for a deposit, there is help out there. You might have heard of the government's First Home Guarantee. This is where the federal government acts as a guarantor on your home loan. If you don't know what I'm talking about, you could already use a family member as a guarantor. What that means is they use part of their own home as equity for your deposit. You might still need to pay some of the deposit, but there are options where you don't. If you don't pay your home loan, well, the bank could come for their home. With the First Home Guarantee, the government acts as that guarantor. It puts up 15% of the property price, leaving you to pay just a 5% deposit without paying lender's mortgage insurance, which you'd usually have to pay with a lower deposit. When the scheme was first introduced, there were caps on the number of buyers that could take part, and there were caps on the amount of income that they could earn. But from the 1st of October 2025, that was all scrapped. Every first home buyer could now be eligible. Mostly. You will need to apply through a participating lender, so not every lender takes part. And there are other conditions, like being a resident or citizen of Australia, living in the home as an owner-occupier, and making principal and interest repayments. There are also property price caps. For example, New South Wales has the highest property price cap at $1.5 million for properties in a city centre or regional centre. Sounds pretty good for a first property, right? Sure, if you're actually able to borrow it. You see, just because you have a lower deposit and are allowed to buy a $1.5 million home doesn't mean you actually can. It also doesn't mean you should, but I will get to that. Yes, the 5% deposit helps you borrow more than if that was your whole deposit. But the banks will still look at your income, they'll still look at your expenses, and if they think that you just can't service that loan, you won't get it. The best thing for you to do is use a borrowing power calculator or speak to a broker and see how much you can actually borrow, then work out your 5% from there. But even then, that doesn't mean you should borrow everything you're approved for. A lot of the concerns surrounding this scheme are to do with borrowers being able to borrow more than they can realistically afford. So even if the calculators and the banks tell you what you can borrow, take a real hard look at your finances to be certain that you can keep up with the repayments. For more information on all of the eligibility criteria and conditions, click the link below to see our guide on Finder.